Good morning again, students. Right, so now we are going to start looking at class question 2. I'll try to keep my eye on the chat, but when I'm actually working in the Word document, I can't see the chat, but every time I hear a message coming through, I'll try and have a look at that. Okay, so this is our question, ladies and gentlemen. You can hopefully see it now on your side. It looks to me like so. So a good exam technique is to look at first what is required of us. And we did that last week already, but let's do that again. They say you are required to prepare the following general ledger accounts of Montague traders for the year ended 31st of December 2018. Vehicles, cost, vehicles, accumulated depreciation, and the asset disposal account. And I said last week we're going to go a little bit further than that, just to illustrate the whole process of recording transactions and events. So we're also going to do the journal entries, even though they're not required for the question. I want us to do that as a learning exercise, right? And then in 2.2, they say you are required to prepare the following note to the financial statements of Montague traders for the year ended 31st of December 2018, the property, plant and equipment note. Now, I have been told, you'll see we do that in a table form. I have been told that you actually learn about a similar kind of table in statistics for accountants. So maybe it will look, hopefully it will look familiar to you. Now, let's go back to the question and see what is given to us. They say we can ignore value-added tax in this question, so we're not going to take that into account. Montague Traders has been operating as a retailer for the past 10 years. You are provided with the following extract from their pre-adjustment trial balance on the 31st of December 2018. So we have to assume there that that is their year end. So the financial year end is the 31st of December 2018. We've got equipment, cost or equipment at cost, 1.2 million rand. Vehicles at cost, 1.1 million rands. We've got for the equipment, it's accumulated depreciation account, and we can see there that that is the opening balance at the beginning of the year, the 1st of January 2018. So that the depreciation for this year has not been calculated or recorded yet. That is still the opening balance at the beginning of the year for 240,000. Vehicles, so the account that accompanies the cost vehicles is this one. Vehicles accumulated depreciation also at the beginning of the year, ladies and gentlemen. So that depreciation expense for the year has also not been calculated. So the balance at the beginning of the year, 480,000. Okay, so now let's see what additional information they are providing here. And they clearly say the following additional information must still be taken into account, right? So it hasn't been recorded or taken into account yet. We must still do that. The first one there, they say depreciation on equipment is written off at 20% per annum or per year on the diminishing balance method. So a lot of information already. So first of all, the depreciation on equipment, that is what we must take note of. It's written off at 20% per annum. So that is our depreciation rate. Which method are we using? The diminishing balance method, right? So lots of information there. And then they say you are required to provide the for depreciation for the current financial year, right? So that is going to be our first entry, ladies and gentlemen. We're going to do a journal entry for that. We're going to post it to our ledgers later on. So let us now first see, what do we need? What do we need to calculate, ladies and gentlemen? This is probably now a little rhyme that must be quite familiar to you. Before we can actually calculate depreciation, what must we calculate first? If you can type in the chat for me, please. Nalita, I think Nalita's got it right. There's a few others now. Kelsey, Leletu, yes. We must first calculate the depreciable amount, ladies and gentlemen. Now, in the case where we are using the diminishing balance method, what is the depreciable amount? Now, remember, this is not the year of acquisition because there's already accumulated depreciation at the beginning of the year on the equipment. So this is a subsequent year. So how do we determine the I know what you are saying with the carrying amount, ladies and gentlemen. By the way, I know what you're saying, but I want us to use the term depreciable amount, right? So what do we use as our depreciable amount in the case of this diminishing balance method? Now comes your answer where you are saying there. Maybe you can type again. The carrying amount or the carrying value. Exactly. Yeah. And the carrying amount, as Lucille says, is the cost less the accumulated depreciation. So, ladies and gentlemen, I've got my little calculator next to me. Hopefully, you've got your calculators next to you. What is the carrying amount at the beginning of the year? Timbela, so where do we find this activity? That is, I've posted this question under last week's class, right? So if you look at last week, what is today's 27th? So it'll be the class of the 20th. The question is still there because we started discussing it just briefly last week. But I'll post the one with the solution, the one that we are working on now. I will post under today's class. Thank you, Lucille. I think that now I haven't worked it out yet, but that looks correct to me. You're welcome, Timbela. Let me just. Okay, no, I don't have to check it. I don't have to check it. There's a lot of students who agree with it, so you must be right. Thank you, Lucille, and everyone else. So our depreciable amount is the carrying amount at the beginning of this year. So how do you arrive at that figure? It's the cost of 1.2 million rands less the accumulated depreciation of 240,000. So that is how we arrive at that figure. And that figure is 960,000. Now, we obviously have had control over this asset for the full year. So to calculate the depreciation, we can simply go and multiply that 960,000 with 20%. You agree? Yes or no? Well, let's find out. Let's go and find out, ladies and gentlemen. I've pre-populated the answer. I don't want to. I'm not a fast typer. I'm a slow typer. So I've actually done the journal entries for us beforehand. Maybe we can just type it in there. That should then be 900 and. Sorry, I didn't have my numlock on. Let me just try that again. So that should be. Is it 900? 960,000 times 20. Where's the percentage? 20%. Right. 960,000 Rand multiplied by 20%. Does that give us 192,000? If you can just confirm that, ladies and gents. 192,000. Yes, I see there's a lot of answers there now. When I was in the Word document, I couldn't see it. Thank you so much for confirming that. So there we have it. So now we've calculated the depreciation, but now we still need to go and record it. How do we record it, ladies and gentlemen? As you know, the expense will be debited. So we are going to debit depreciation on which category of asset? On equipment, right? Depreciation on which category? So we have a little dash there, equipment. It's a dash and not a colon because it's an expense, right? If it had been an asset account or even a negative asset account, it would have been a subsection. So there we would have indicated that with a colon, like we discussed a few times already. Which account are we going to credit? Now it is the negative asset, that account where we actually accumulate all our depreciation expenses for the year, for each year, last year, the year before, this year. We accumulate that for that particular category. What is the category? Equipment. So we're going to start, when we name our account, we're going to start with the name of the account, equipment, colon, What does the account contain? Accumulated depreciation, right? So there we go, ladies and gentlemen. Happy with that first one? Now, do you want us to post it now, or shall we post all the journals later on? That's a hard question to answer. Maybe we can do all of them later on, right? Let's do all our journals, and then later on we can go and post them. That is later. Okay, we've got a difference of opinion. In practice, when you are really out there in practice, you will normally post them later on, right? You'll do all your journal entries for the day or for the week, for that matter, sometimes, and then you'll go and post all of them at the end of the day or at the end of the week, right? Okay, so let's do it the way that we would have done it in practice. Now let's go to the next one, ladies and gents. Let me just scroll back up to the question. By the way, the student who asked where to find it, I hope you found it. If you haven't, you must just ask again, or ask one of your fellow students there. Now let's go to the second one, ladies and gents. Let's read through that. They say depreciation on vehicles. So that is now the other category of property, plant, and equipment, right? So we've got two categories, equipment and vehicles. We've dealt with the equipment. Now we've got to deal with the other category of PPE. They say depreciation on vehicles is written off on the straight line method, right? So now we're not using diminishing balance, we're using the straight line method for the vehicles. You are required to provide for depreciation on vehicles for the current financial year. The vehicle, looks like it's only one vehicle, which is used for deliveries, was bought on the 1st of January 2015. So that's a number of years ago, 3 or more years ago already, at a cost of 1.1 million rands. As we can see there, that is the balance that is in the cost account. It has an estimated residual value of 300,000 rands and an expected useful life of 5 years. Now, let me ask a similar question again, and let's see who gets this, if everyone gets this right now. Before we can calculate depreciation, what do we have to calculate first? Depreciable amount. Thank you, Nilisiwe. Exactly. And everyone else, thank you. Thank you, Kelsey, as well. And a lot of answers coming through now. Thank you. The depreciable amount. Now that we are using the straight line method, ladies and gentlemen, how are we going to calculate the depreciable amount in this case? Thank you, Inati. There we go. Thank you, AG. Exactly. The cost less the residual value. Thank you, Niliswa, and everyone else. In other words, the amount that we want to write off as depreciation over the useful lifetime. So it's the cost less the residual value. So, ladies and gentlemen, let me just go back to the Word document. So there we can see in the information they provide us there that it had a cost of 1.1 million and it has an estimated residual value of 300,000 rands, right? So what is therefore our depreciable amount? Thank you all. Where to? Everyone else, there's a lot of answers coming through. I don't know how you can be so quickly on the answers. I'm very impressed with that. It's fantastic. That looks right to me as well. So everybody agrees it's 800,000 rand. So I don't even need to go and calculate it. You are all in consensus, as they say, 800,000 rands. Okay, so that is our depreciable amount. So if we have this vehicle at our disposal, or I should maybe not use that because that can have a different meaning as well. As we have this vehicle for throughout the whole year, how are we going to calculate the depreciation expense now for this particular year? What are we going to do with that 800,000 rand? What are we going to do now to calculate our depreciation? Thank you, Lucille. Exactly. We are going to divide it by 5, right? Thank you, Leletu. Thank you, Lelita. Okay, there we go. Divide by useful life, which is 5 years. Thank you, Inati, as well. There we go. There's the whole formula. 800,000 divided by 5. So, ladies and gentlemen, that's going to be our depreciation expense for the year. We have to go and record that. Maybe I can just write that in the journal entry as well. Let me just see if my autosave is on so that it saves it for when I post it later. Oops, now I've gone too far. Now I've gone too far. Now I've gone too far. There we go. So we know now, ladies and gentlemen, let me just go to the chat. I think you probably typed in for me the amount there, 160,000. Thank you. You are so fast. You're way ahead of us. Thank you so much. So the amount is 160,000. Let us maybe just go and also include the little formula there. So let us say there it is 800,000 divided by 5 years, right? So that we know where that comes from. Or I think was it Lucille a few weeks ago who said that we can also convert the 5 years to a percentage. So let's maybe just talk about that briefly. If you wanted to convert the 5 years to a percentage per year, what percentage would that then have been? We discussed that at length last week. 20%. Thank you, Anezwa. Absolutely spot on. So if we wanted to convert the 5-year period to a percentage, it would give us 20%. How do we get that? The full 100 divided by 5 gives us 20%. So we could have done that as well. But as we said, I think 2 weeks ago, maybe 3 weeks ago, in the case of the diminishing balance method, you have to use a percentage because of the way that it works. But in the case of the straight line method, it doesn't have to be a percentage. You can simply use the number of years, or you can convert that to months, the number of months that you intend to use that particular asset. Okay, so now we have the figure. It is 160,000 rands, as you've all confirmed for us there. Thank you. So the entry will basically be very similar. It's just that it's two different accounts, but similar kind of accounts. So again, we are going to debit the expense, ladies and gentlemen. We know expenses are debited. The expense being depreciation. That's the expense on which category of asset or category of property, plant, and equipment? Vehicles. And where do we accumulate all the amounts of depreciation that we write off over the years? On the account with that contains the accumulated depreciation, right? So what does the account name look like? Vehicles is the category of property, plant, and equipment, colon. What does the account contain? Accumulated depreciation. Right, ladies and gents? So far, so good. Are you all happy so far? Or are there any questions? All good. Thank you, Nelita. All good. I hope the rest happy. Thank you. Okay, I hope everyone is in the same boat. Thank you, Lucisipo. Thank you, Leleto, and everyone else. Okay, let us then proceed to the next one, ladies and gents. So let us go back to our question. So I'll have to scroll all the way up. So now with paragraph number 3, they say, since this delivery vehicle, so we saw that we only have the one, since this delivery vehicle has become unsuitable for their needs, so they cannot use it for what it was intended for anymore, Montague traders sold it on credit for 500,000 rands on the 31st of December 2018, and this transaction still has to be recorded. Now, we've already recorded the depreciation for the full year, so we are very glad to see that this transaction actually took place at the end of the year, so we do not need to go and adjust for our depreciation expense because we still had use of it for the full year. We only disposed of it at the end of the year, on the very last day of our financial year. And we sold it for credit. Right, ladies and gentlemen, so what will be our proceeds? What will that debtor eventually have to pay us for buying that vehicle? That is 500,000 rands. But Now we must do something with the balances in our ledger accounts, because now, once we have sold it, we no longer own it, which means we've got to go and get rid of all balances relating to that vehicle. It's not ours anymore. We've got to get rid of the balances. What do we call that process where we get rid of the balances? Let me just test whether you remember. What do we call that process? We remove any balance of an asset that we have disposed of. It is an asset disposal. It is an asset disposal. The actual transaction. You're all correct. You're all correct. Um, Thank you, Mr. Sitole. What I was actually referring to, even though it's what happens, the event is an asset disposal. Thank you, Zaduli, as well. The process from an accounting perspective, where you remove the balances of those items that you have disposed of. Thank you, Sibusiso, as well. That is called derecognition, right? When we originally recorded it, we recognized it, but now we are derecognizing it. So, ladies and gentlemen, how many balances do we have as it stands that relate to that vehicle that we are selling? How many balances? Let's just establish that first. And then we can identify them. I've just said them, so it must be more than one. Potentially three. Yes, you are correct. Potentially three. But in this particular question, we do not have accumulated impairment losses. Thank you, Kelsey. But thank you for all those answers. You are correct. Potentially, it could be three if, like we will get in financial accounting, two, if we had accumulated impairment losses. But in financial accounting, one, we are not dealing with impairment losses yet. That's a topic for next year. So in this case, it's only the two balances. Now, what are they? Let's identify them. You can just use abbreviations, ladies and gents. What are those two accounts? Lucille, that is more complete. Thank you, Timbela, for that answer as well. But it is the cost, exactly as Lucille says there. The category of asset that we are looking at is vehicles, obviously. But what we need to get rid of is the cost as well as the accumulated depreciation. And please, ladies and gentlemen, you have to make a note this now. Please, please, you have to make a note of this. That account is not the expense. The expense on the debit side is depreciation. But the negative asset is not vehicles depreciation, it is vehicles accumulated depreciation. So it's the accumulation, the sum total of all the depreciations we have written off over the useful lifetime, right? So it is whatever the asset name or category is, colon, accumulated depreciation. Now let's do this one step by step, one by one, step by step, like I say. What is the balance on the cost account for vehicles? This is an easy one. The next one is not going to be that easy. What is the balance on the cost account for vehicles? In other words, an account called vehicles colon cost 1.1 million. 1.1 million. There we go. Thank you so much. Very easy. That hasn't changed from the very first day when we recognized that vehicle, when we acquired it. That was established. That remains the cost throughout its useful lifetime, right? So it's 1.1 million rands, as you say. Now this one is a little bit more tricky, slightly trickier. What is the balance on the vehicle's accumulated depreciation now at the end of the financial year? In other words, at the 31st of December 2018. Everyone seems to say, oh, okay. Looks like you've like it was not so difficult after all. Okay, can somebody type for us there? How do you arrive at? Oh, thank you, Inati. Inati has already done that. Okay, I was just going to say if someone can type for us how we arrived at that. Okay, so Inati has given us the answer there, ladies and gentlemen, at the beginning of the year. Let me just go back to the Word document so that I can point it out. At the beginning of the year, where is vehicles? Uh, on the 1st of January, in other words, right? At the beginning of the year, our accumulated depreciation account had a balance of 480,000 rands. But now, a few minutes ago, earlier today, let's say earlier today, we calculated the depreciation on vehicles for the year. And what was the depreciation on the vehicles for the year? Maybe we can just go to that journal again. We credited that account, vehicles accumulated depreciation, there, with another further 160,000 rands, right? So therefore, ladies and gentlemen, what is the balance now at the 31st of December on that account? It is 640,000, right? There we can see it. So now we've got to go and de-recognize it. Now I'm going to ask you a few questions again, ladies and gentlemen, but you've got to listen pretty carefully what I'm saying. uh, Shamila, I've just gone through it. Do you want me to go through it again, or did you type that before we went through it? Okay. Uh, remember the opening balance on our accumulated depreciation account for vehicles was 640,000 at the beginning of the year, right? But then here you can see that journal entry, the second one, on the 31st of December, we went and we credited it. Remember that 640,000 is a credit balance, right? It's a negative asset. There, on the 31st of December, we've credited that vehicle's accumulated depreciation account with a further 160,000. So now what is the balance there, Shamila? 640 plus 160,000? Was it 640? Oh, wait, let me just go and check that. Let me just double check. So it was 640,000 at the beginning of the year plus 160,000 now at the end of the year. Oops. No, let me go back to the question. Let me just go all the way up again, ladies and gentlemen. I don't think I've got the right figure in my head here. 480, sorry, it was 480,000. 480,000 accumulated depreciation. There we can see it. 480,000. And now we've credited that account with a further 160 plus 160,000. That gives us 640,000. So that's where that figure comes from. The 640. You've all got that now, hopefully. Let me just see. Let me just find the journal again. And then let me go to the chat. Thank you, Siduli. Yes, there we go. There's Siduli, as well as Inati, right? So we just added. We took the opening balance on the accumulated depreciation account at the beginning of the year, and then we went to have a look. Did we adjust? Did we make any further entries during the course of the year on that accumulated depreciation account? And the answer is yes. On the 31st of December, there, that second journal entry, we've credited that vehicle's accumulated depreciation with a further 160,000. So your opening balance of 480,000 plus 160,000 gives us that 640,000. Maybe this is a good time to go and have a look at the ledger. I know we said we're going to post it later on, but this might be a good time to go and have a look at that ledger account. So let us go to that ledger account. What is it? The accumulated depreciation on vehicles. So there it illustrates it for all those students who are uncertain, ladies and gentlemen. For all those students who are uncertain, There we can see on the vehicles, that is our account that we are looking at, vehicles accumulated depreciation. It had an opening balance there of 480,000. It's a negative asset, so it will be a credit balance. Then when we calculated the depreciation expense for the year on the vehicle, we debited the depreciation vehicles, that's the category, and we credited this account again. We credited this account now with that's the contra account for the depreciation expense, right? So we credited this account with the depreciation that we have written off this year, this 2018 financial year, with 160,000. So that means the total balance on our credit side on the date of disposal comes to 640,000. So it's that figure there, opening balance, plus the depreciation for this year. Obviously, the opening balance represents the depreciation expenses in prior years, all the previous years that we had use of this vehicle, right? And this is the depreciation for this year. So our total depreciation that we've written off over the total useful lifetime until the day that we are disposing of it comes to 640,000. And that we'll have to take out, that we are going to take to the asset disposal account, right? But we'll look at the entries just now. Let's go and do that journal entry. Okay, ladies and gentlemen, I don't want to display the journal entry quite yet. I want to ask you a few questions first. So let me just pause the document there. As it stands, Inati, the negative asset, you get the positive asset, which is the cost, right? And then you get the negative asset, which is the accumulated depreciation, and the difference between those two accounts combine. They combine to give you the carrying amount, right? So the balances on those two accounts, the positive asset, which is the cost, and the negative asset, which is the accumulated depreciation, the net effect of those two balances is the carrying amount at that point in time. So let me ask you a few questions, ladies and gentlemen. As it stands now, before we are disposing it and before we are doing the derecognition transaction, before we record that, does the cost have a debit balance or a credit balance? The cost has a debit balance because it's a positive asset. The cost has a debit balance as it stands. So my next question, ladies and gentlemen, now that we are going to derecognize that asset, we need to get rid of that debit balance. So what do we have to go and do with that cost account now? Debit or credit? Now we've got to go and credit the account. Right, you are spot on. Let's look at the other side of that same coin, ladies and gentlemen, the negative asset, the accumulated depreciation account. As it stands at the moment before the derecognition, to cancel it out. Thank you, Olwetu. Well put. That is exactly the point, right? As it stands, the accumulated depreciation account, does it have a credit or a debit balance before the derecognition? A credit balance. Thank you, ladies and gentlemen. You are spot on. You are spot on. You are absolutely on fire, as they say, right? So now, if we need to get rid of it, or like, who was it that said to cancel it out? Now it's a little bit far up. Okay, it's too far up now. To cancel it out. What do we have to do with that account now to get rid of that credit balance? Thank you so much. Thank you so much. There we go. Perfect. Now we have to go and debit that account. Right, ladies and gentlemen, we've already seen what the amounts, what the balances on those accounts are. So let us go and record that transaction. There's obviously another little factor to it, the factor that we have sold it on credit and the fact that we are getting 500,000 for it. But let us just focus on the derecognition first, and then we can take it further. So this journal entry actually has 4 legs. whereas most journal entries very often only have two, but a journal entry can be long. It can have 3 or 4 or 5 or 6 legs. There is no limit to that. So this journal entry is a little bit more complicated, but let us see how it works. Let us analyze it. So first of all, let's maybe start with the second leg there. First of all, we said we have to get rid of the cost of that vehicle that we've sold. So currently, as it stands, the vehicle's cost got a debit balance of 1.1 million. So it means we have to go and credit the vehicle's cost account with 1.1 million. Then that account closes off to zero. It cancels it out, as that student said earlier, right? The same with the vehicle's accumulated depreciation. We've debated this. Hopefully, everyone now sees where that 640 comes from. It's the 480 opening balance plus the 160,000 that we've written off this year. So the total balance on the credit side of the vehicle's accumulated depreciation currently is 640,000 rands. We want to get rid of that balance to cancel it, right? To cancel it out. So it means now we have to go and debit that vehicle's accumulated depreciation account with 640,000. But now our entry does not balance yet, ladies and gentlemen. We've got a 640,000 on the debit side. We've got 1.1 million on the credit side. That means we need some more information, and they have provided us with more information. Let us just go back to that third paragraph there. They said we are able to sell it on credit, so we will have to debit some sort of a debtor or an accounts receivable. We've sold it on credit for 500,000 rands, ladies and gentlemen. So if we are going to raise a debtor, let me just go to the chat. If we are going to raise a debtor, somebody that owes us money, in other words, an asset, will we raise that debtor on the debit side or the credit side? Debit side. Thank you so much. Right. On the debit side, thank you that you are helping one another out there. I'm very pleased to see that you are debating the matters there amongst yourselves there. That is very good. That is how we all learn. Okay, so we have to raise that debtor on the debit side. Let us go and do that. Let us go down to our journal entry. Even though it wasn't required, we want to go through the whole process there. So we are going to debit debtors or accounts receivable, whatever you call the account in your general ledger, right? Debtors or accounts receivable by how much? What do they owe us for that vehicle? 500,000 rands, right? So now we're happy. We're hopefully done with this journal entry. But what must we still check, ladies and gentlemen, when it comes to any journal entry or yeah, basically any journal entry? What must it do? What must it do? And this is a must. There are a few things in life that is a must, but this is one of them. What must all journal entries eventually or ultimately do? Balance. Thank you, Aneswa. They must balance. Does this? Thank you, everyone else. There we go. It must balance. Perfect. Thank you so much for all those answers. Now, ladies and gentlemen, does this entry balance? Let's see. Ignore that last one because that last leg because we haven't got that yet. On the credit side, we've got 1.1 million rands, right? It's just the vehicle's cost. On the debit side, we've now got 5 plus 6 is 11. We've got 1,140,000, right? 1,140,000. So on the debit side, the total, the 640,000 plus 500,000 gives us, can you just confirm that I've worked it out correctly in my head? 1,140,000? Thank you, Owetu. Thank you. Thanks for confirming that, ladies and gentlemen. So it means our journal entry does not balance. What do we have to do? What do we need? What do we require to make it balance? Another debit or must we now add a credit to make it balance? if our debit side now exceeds the credit side. Yes, correct. Absolutely. Our debit side currently as it stands is more than the credit side. So we'll have to have a credit to make this journal entry balance. And what is the difference? What is the amount that we need to make this journal entry balance? 40,000. Thank you so much. There we go. You are spot on fire as usual, as the whole day and as the whole year, actually. Fantastic. So we need 40,000. So we know that we can now go and enter 40,000 rands there. The only problem that we still have is we must, yeah, on fire. Thank you, Sibuyile. Exactly. Thank you. I can't do the emojis while I'm talking. Only when somebody else is talking. Thank you for doing that. That is exactly true. That is exactly so. So the only thing that we now have to go and decide, ladies and gentlemen, what does that present? It means, let's talk about it logically, and then we can go and give names to the account. Let's talk about it logically. Let's talk about it logically. What is the carrying amount? What is the carrying amount? If you can type for me, of that vehicle on the date of disposal. In other words, what is the balance or the book value that we are carrying in our ledgers? 460,000. Thank you so much. So our carrying amount, and how do we get that? That is the 1.1 million less the 640,000, obviously. Okay. So our carrying amount, thank you for all those answers, at the moment is 460. So that is what we believe is the value of that vehicle. That right according to our estimates of depreciation. But what are we selling it for? We are selling it for what? For how much? I'm jumping up and down here. I'm sorry. For 500,000 exactly. We are selling it for 500,000. So it's 40,000 more than the book value, ladies and gentlemen. So are we making a profit or are we making a loss on this disposal? If we are getting 500,000, but our book value is only 460, we're making a profit. Exactly. We are smiling, like a Cheshire cat, as they say. It looks like they're always smiling. Right, so we've got a big smile. We are making a 40,000 rands profit on the disposal of this asset. Thank you for all those answers. Right, there we go. Or alternatively, ladies and gentlemen, you could have simply said, if you don't want to go that whole logical route, you could have simply said, if it's a debit, it's got to be a loss. If it's a credit, it's got to be a profit. It's as straightforward as that. Sometimes, yes, thank you, CBCC, we've got some money that we didn't bank on now, right? So we could simply, sometimes accounting can be very straightforward. Sometimes it can be very complicated, but in this case, it's actually very straightforward. If it's a debit that you need to make it balance, then it means you have incurred a loss because expenses and losses are always debits. If it's a credit that you need to make this journal entry balance credits, uh, uh, then you know that incomes and profits are always on the credit side, right? Okay, so you can do it in a simple way like that as well. So there we have now recorded the whole transaction, the derecognition, as well as the amount that is owed by that person or other entity that has purchased the vehicle from us, as well as calculating whether we are making a profit or a loss on the disposal of this vehicle. All happy so far? Can we go on with the next one? Or are there any questions? Okay, we can carry on. Thank you. There's some thumbs up and they say we okay. Carry on and so on. Sibusiso, how do we record? We don't record the depreciable amount. right? So it's the depreciable amount is not something that you record anywhere in your books. It is just a calculation that you must make before you can calculate the depreciation, which you will then record, right? So the depreciation will be recorded, but before you can actually record it, you've got to calculate the depreciation, and before you can calculate the depreciation, you've got to calculate the depreciable amount. I hope that answers your question. So it's not something that you can that you record. Okay, perfect. Thank you so much. Nelita, you can't get 40,000. 6 plus 5 is 11. So on the debit side, we've got 11,000, 1,100 and 40,000, and on the credit side, before that 40,000. Maybe that's your problem, Nelita. Remember, that is now before the 40,000, right? The 40,000 is the answer. So you mustn't add up the 40,000 as well. Only when you balance off the account. Obviously, once you've inserted, once you've added, you're okay now. Oh, okay, thank you, Nelita. You're okay. Perfect, perfect. So now let's go to the next transaction, ladies and gentlemen. So let us scroll up. Let us go up to our question. Let's see what the last one there was. The paragraph number 4. They say on the same day. So in other words, we are still talking about the 31st of December 2018. On this same day, Montague traders bought a new delivery vehicle because they couldn't use that one anymore. Perhaps it was too small or whatever. Anyway, there was a reason. On the same day, Montague traders bought a new delivery vehicle on credit at a cost of 1,260,000 rands to replace the old one. This new vehicle has an estimated useful life, estimated residual value of 360,000. So if we need to go and calculate depreciation on it next year, we know how to calculate the depreciable amount and an expected useful life of 5 years. And this transaction still has to be recorded, right? So we must still go and do that. So let us do that, ladies and gentlemen. Let us maybe just ask a few simple questions. Which account are we now going to debit? I want the full name of the account this time, please. Which account are we going to debit? We are now recognizing the opposite of derecognition. Vehicles cost, right? Vehicles cost. Thank you, ladies and gentlemen. We are using that same account. We're not creating a new account. We have an account called vehicles cost. We're going to reuse that account. Thank you so much. We're going to debit vehicles cost. With how much, ladies and gents? What is the cost? In this case, there's only a purchase price. 1,260,000. Thank you. There we go. We've all got that, right? So that entry, that debit side is quite straightforward. So it's simply vehicles cost 1,260,000. Now they say we are buying it on credit, ladies and gentlemen. Let me just confirm that. The vehicle on credit. So which account are we going to credit? Obviously, that will have to be with 1,260,000 as well. So the amount is got to be the same. But which account are we going to credit? Account payables. Thank you, Lucille. Thank you, Zeduli. Thank you, everyone else. Accounts payables or creditors control, whatever you call that account in your books of account, right? So let's go and see if we are correct. I see I have a meeting that started now a minute ago, but I'm not going to attend that meeting. That's why they're also calling me. I've already said that I can't attend the meeting because I've got a class. They must just go and look at my replies. Let us go down to our journal entry. Oops, now I've gone too far. I've just made a few little notes there, but we've discussed that last week already. So there we go, ladies and gentlemen. We're going to debit vehicles cost, the account that we already have in our books of account with 1,260,000 rands. We're going to credit trade payables or creditors or accounts payable, whatever you call that account in your books of account, also with 1,260,000. I just copied the frame of the journals from somewhere else, so there are no further journals. Those are the ones. So that is pretty straightforward. We are simply recognizing that new delivery vehicle. So we are reusing the vehicles cost account. Obviously, it's an asset, so we're going to debit it, and we're also going to raise the liability towards the supplier of that vehicle. Okay, ladies and gents, so far, I think we haven't actually done the ledger accounts yet, so we haven't actually answered anything, but now we've got all the information that we need to go and answer it. Maybe we can just pause there for a short bit. Are there any questions at this point in time before we now go and draw up our ledger accounts? Students, excuse me, just for 30 seconds. I just want to phone this person back and say I'm not going to attend the meeting. I'll be with you in less than 30 seconds. Okay, and I'm back. They must just go check my reply in the email. Anyway, so ladies and gents, I see you all say no, nee, thank you, no, no. Okay, right, ladies and gentlemen. Kelsey, when is the PPE quiz due? There's no specific date. It is actually available. Thank you, Lisel. Geen vraag of hierdie oomblik nie. Dankie. There's no specific due date, Kelsey. In fact, I think I've set it to be available until the 31st of December 2022. So you can play on it until the very last day of the year. So it's available for you to practice on. So the PPE quiz will not close before the end of the year. That is for you there to go and assess for yourself whether you understand the topic. Okay. Pleasure, Kelsey. Thank you, Lucille. Okay, right, ladies and gents, let's go and do our general ledger accounts now. Right, so here we've got all our journals, so it's simply a matter of starting out our general ledger accounts with the opening balances, if they have opening balances, and then recording all of these transactions. So we see that there are three that we've got to go and do. The cost account of vehicles, if I remember correctly. Let me just go and confirm that. Vehicles cost, vehicles accumulated depreciation, and asset disposal. Now we know, ladies and gentlemen, this we know, that account does have an opening balance, and we know that the opening balance is a debit. We know that that account also has an opening balance, and we know that opening balance is a credit. This is what they refer to as a temporary or a suspense account. I think the general term is a suspense account. So it means it only exists for the purpose of that disposal transaction. So it only exists temporarily. So it has no opening balance. It has no closing balance. It is just simply there to enable you to really, if you think about it, to go and calculate the profit or loss on disposal, right? So it is just to have a contra account to your derecognition of those balances, right? So let us go and have a look at the vehicles cost, ladies and gentlemen. Perhaps if we go and have a look at the top of the question, there we saw that the vehicles cost had an opening balance of 1.1 million. So we are simply going to put that as a debit, starting debit or an opening balance on our vehicles cost account, 1.1 million, right? And then we saw from our journals, if we go to our journals, we saw that when we disposed of that asset, when we disposed of that vehicle, we credited the account. I'm not going to go down to all of them. I will post this so that you have all the journal entries there. But there you can see when we disposed of it, we credited that account. So there's the journal. So it's just a matter of posting them up to your ledger account. So let us just go through the ledger account, but I'm not going to scroll down to all the journals because they are going to be available for you. Right? So at that point in time, before we acquire the new vehicle, it means the balance on that account is 0. And then in our very last transaction, we saw that we acquired a new vehicle. We debited the vehicle's cost with 1.26 million rands, ladies and gentlemen. So that means that at the end of the day, this account now has a balance of 1,260,000. When we balance this account off, we are going to carry it down to the debit side for the new year, right? So that is something that you've done earlier in the year, how to do general ledger accounts, how to balance them off and close them off. So that is pretty straightforward. When it comes to the accumulated depreciation account, ladies and gentlemen, we had a look at that a little bit earlier. On vehicles, it has an opening balance of 480,000, so we can simply put that on the credit side as an opening balance that we brought down. There, 480,000. In our journals, we now saw, we debated that for quite a while, that we've added further depreciation expense for the year of 160,000, like we've said earlier, which gives us a total of 640,000 depreciation over all the years that we've had use of that vehicle. But now we've sold that vehicle on the 31st of December, which means that we also, when we are derecognizing the vehicle, taking out that balance. And where do we take it to? We take it to the asset disposal account, right? The same as with the cost there, right? The cost we've taken out of the account when we derecognized it, and we took it to the asset disposal account. The same happens with the accumulated depreciation. Now I'm going to ask you a little question, just as a matter of interest, ladies and gentlemen. Let's just say that those are the only entries that we've done regarding the disposal so far. We've taken the 1,100,000 cost to the asset disposal account. We've also taken the 640,000 accumulated depreciation to the asset disposal account. So if those are the only two entries on the asset disposal account, what is the balance on that asset disposal account now represent? What does that balance now represent? Tricky one, that. But if you think about it, we haven't recorded the proceeds yet, but nice try. Yes, Kukle. Yes, Aneswa, the carrying value. So remember, the carrying value or carrying amount, thank you, Leletu, is cost less accumulated depreciation. So if you have taken the cost and the accumulated depreciation on that asset that you are disposing of to the asset disposal account, there you go, CBC, thank you. Then if you've taken both those balances to the asset disposal account, it means that at that point in time, the balance on the asset disposal account represents the carrying amount, right? Lucille, the question was just once you've transferred the cost of the item that you are disposing of, as well as the accumulated depreciation of the account of the asset that you are disposing of to the asset disposal account, what would the balance at that point in time on the asset disposal account represent? It's the cost less the accumulated depreciation. On the debit side, you've got the cost. On the credit side, the accumulated depreciation. So temporarily, the balance on that account then represents the carrying amount. But now we see that we sold this asset for 500,000 rands, ladies and gentlemen. So that's also now going to be recorded on the asset disposal. So if we only have the first two lines, let me see if I can highlight the two lines. If we only have those two lines, which represents the cost less the accumulated depreciation, it means the balance on the asset disposal account at that point in time represents the carrying amount, right? But now we are also going to receive money eventually when that debtor pays us, right? Eventually we're going to receive 500,000 for the vehicle. So as you've seen in the journal entry, we debited the debtors or accounts receivable by 500,000. What is going to be our contra entry? We're going to credit the asset disposal. So that is the one that we find there. And then, ladies and gentlemen, what we will then see is that the credit side adds up to 1,140,000. So that will explain a few other questions earlier on when we did the journal, right? It means on the credit side, it adds up to 1,140,000. At this stage, that entry isn't there yet. So on the debit side, all we have is 1.1 million. So we need a further 40,000 in order to close off this balance. Remember, we said the asset disposal account, which is a suspense or a temporary account, does not have an opening balance. It does not have a closing balance. So it means it has to close off. Not balance off, close off. It has no balance. Okay. So therefore, ladies and gentlemen, what do we need to make this ledger account close off? Same amount, obviously. We need a further 40,000 rands in order to arrive at that same total so that this account balances off or ends off, right? So that what I'm trying to say is that the debit side balances with the credit side. So in other words, we can close off this account, right? And then again, we can simply go through it logically. What does it represent, ladies and gentlemen? At the end of the day, once this transaction leaves the asset disposal account, it's going to end up on the credit side of a ledger account, and therefore it is a profit, right? If it ended up on the debit side, it would have been a loss, but it's going to end up on the credit side. Here we can see we are crediting profit on disposal of assets and we are debiting the asset disposal. So therefore, because it ends up on the credit side of that account, it has to be a profit. Okay, ladies and gents, hopefully you are happy with the ledger accounts now as well. So now we have actually answered that first question. Yes, exactly. Thank you, Sibisiso, for providing that answer as well. Thank you. And like I say, I appreciate it that you are helping one another out there, right? Yeah, debtors is an account, so that has been answered. Okay, ladies and gentlemen, so far so good. We'll have to go. We'll have to proceed now with the last part of the question, and that is the property, plant, and equipment note. Okay, let us just see. That is what was required, just to make sure. I know it was, but just to make doubly sure, prepare the PPE note. Okay, ladies and gentlemen. Now, we've discussed this in theory, and you know that there is an example in your notes. Towards the end of the notes, there is a typical table, or yeah, let's call it a table. I think that in stats, they actually also calls it a something table, where we provide the PPE note. So there is an example. So now we we are going to draw up one. Now, as we've spoken about the note a few weeks ago, we said basically you are reconciling. You remember we spoke about this, I think 2 weeks ago, or maybe last week. We are reconciling our opening carrying amount with our closing carrying amount, right? We are reconciling the opening carrying amount for each category of PPE with the closing carrying amount. And we also know that the carrying amount consists of the cost less the accumulated depreciation. So that means we'll have to start the note with the cost and the accumulated depreciation to give us the opening carrying amount, and we'll have to end the note with the closing balances of the cost and the accumulated depreciation accounts for our various categories of PPE, which then provides us with a carrying amount. Right, so that is what we need, and in between will be what we call our reconciling items, ladies and gentlemen, or you can even refer to it as the movements. Sorry, there was a little bit of a hiccup with my connection. Can you hear me again? My connection just went off there for about 3 or 4 seconds. You can hear me again. Okay, thank you so much. Don't know what happened there. Probably just a little internet hiccup there. Okay. In any case, ladies and gents, so now let us go and draw up our note. So let us go and see what opening balances we have. Right at the top of the question, we saw that for equipment, we had a cost opening balance of 1.2 million. Uh, and for the same equipment, we had an opening balance for accumulated depreciation of 240,000. So that will represent a column. We're going to allocate a column in the table to each category of asset, right? We've got two categories. We've also got vehicles. So there we see we've got an opening balance for vehicles at the beginning of the year of 1.1 million, and its accompaniment, its spouse, if I can put it that way, the accumulated depreciation on vehicles. Right. So those are the opening balances that we'll have to use in our table. So we need basically three columns. We need a column for our equipment, which is a category of PPE. We need a column for our vehicles, which is another category of PPE. And then we need a totals column, right? Very often in an exam situation, you are not required to provide the totals column as well. But just remember, in practice, when you actually publish your financial statements, you have to have a totals column as well. Right, so we are sorted with our opening balances. So let's go to our note. Let's just go and put that in. As you can see there, ladies and gentlemen, we've got the cost. We've got the cost at the beginning of the year. In the case of equipment, so that will fall under the heading or the column for equipment. We have the opening balance of 1.2 million rands, right? Sorted. And then also in that same column for equipment, we've got the accumulated depreciation, right? Accumulated depreciation of 240,000. But now, ladies and gentlemen, what is important to remember here, in any financial statement, whether it's your statement of comprehensive income, whether it's your statement of changes in equity, whether it's your statement of financial position, whether it's your statement of cash flows, which we do in financial accounting too, or whether it's notes, you do not have a debit and a credit side, right? You've only got a one column for your debits and your credits. So how do we distinguish between them? You show the one as a positive and the other as a negative, right? Because we are dealing with an asset or a combination of assets called property, plant, and equipment, the cost should always exceed the accumulated depreciation. The accumulated depreciation can never be more than the cost. So therefore, we are going to, simply because of that reason, but also because we are dealing with an asset, we are going to show the debits as positives and the credits as negatives. And that really is why accumulated depreciation is sometimes described as a negative asset, right? So there we go. We deduct the accumulated depreciation opening balance from the opening balance of the cost at the beginning of the year. That then gives us the carrying amount for equipment, that category of PPE, at the beginning of the year. And there we've got to go and describe it, ladies and gentlemen. Carrying amount on the 1st of January 2018, or you could also have described it as carrying amount at the beginning of the year. We do exactly the same with vehicles, ladies and gentlemen. We've just seen a few minutes ago that the opening balance on the cost account was 1.1 million. We saw that the opening balance on the accumulated depreciation account for vehicles was 480,000 negative now, and we put a nice little block around that. So we outline, as they say, we draw an outline and we calculate the carrying amount. So it'll be the 1.1 million less the 480,000 gives us 500, what's it, 620,000. Sorry, I can't read there. 620,000. So that's the carrying amount at the beginning of the year that we have to reconcile with the carrying amounts at the end of the year. The total column, ladies and gentlemen, is simply by adding up across, right? So your 1.2 million plus your 1.1 million, if you add them up across, that will give you 2,300,000, right? The same with your accumulated depreciation. You add them up across, so it's a minus 240 and another minus 480,000. That gives us a total minus 720,000, right? And what we can do now to check whether we haven't made any mistakes, we are going to take that figure, the cost, the total cost of all our categories of PPE, minus the total depreciation of all our categories of PPE, and that must give us that amount, right? And then we're going to double check it, ladies and gentlemen. Then we're going to see whether we are correct. So then we want to identify any possible mistakes as early as possible before we carry on. We're also going to see, does those two amounts, when you add them up, the 960,000 plus the 620,000, does it also give you that figure? If it doesn't, then we've made a little mistake here somewhere, and we can go and find it, right? So it must add up. It must add up from top to bottom. So that amount less that amount must give you that amount, and it must also add up across from left to right, right? So that one plus that one must give you that one. Okay, that was a mouthful, and we only just started with the opening balances, right? So let us just pause there. Have you got any questions so far? Just on those opening balances, ladies and gentlemen. Thank you, Oweta. So it is correct, right? Thank you, Mr. Satole. All good, all good. Okay, thank you, Nati. Thank you, Sibusisu. Thank you, Nelly, as well. All good so far. Okay, so now we can carry on, ladies and gents. Now we can go and have a look at what were our movements on those accounts during the year. Now, there are two ways in which we can go about this. We can go and look at our journal entries, or we can look at our general ledger accounts. I would suggest in this case, because we have drawn up the general ledger accounts, it might be easier to go and have a look at them. But we haven't got all the general ledger accounts, right? We've only got those three general ledger accounts that deals with the motor vehicles, right? So we'll probably have to go and look at some of our journals at the very least. So maybe we can do a combination of the two. Okay, so now we have to go and look at what happened during the course of the year. And now you remember we said a few weeks ago there are many possible changes that could have happened during the course of the year. There are probably about 7 or 8 things that could have happened, but some of them are quite complicated. So we are only in Financial Accounting 1. We are only going to look at 3 movements or 3 changes that could have happened during the course of the year. Maybe you can type for me some, or you can see it in front of you, so I'll just mention it. The 3 that we are going to be looking at in Financial Accounting 1 would be any additions to our property, plant, and equipment during the course of the year that will be recorded at cost. Then, ladies and gentlemen, any disposals that we have made during the year. In other words, we have sold some of our property, plant, and equipment. That also represents a movement. And in that case, what do we have to take out? The carrying amount. We have to take out the carrying amount at the date of disposal. And then the third one, the only other one in Financial Accounting 1, the third one is what was our depreciation expense for the year, because that increases our accumulated depreciation. So maybe let's just analyze the movements, ladies and gentlemen. Additions. What will it affect? Additions. Will it affect the cost, or will it affect the accumulated depreciation? If you can type for me, cost or the cost. Thank you, Sisu. That was quick. Oh, thank you all. Thank you. Thank you, Liema. Okay, and everyone else, thank you, Luletu. The cost. It'll affect the cost. So clearly, if there are any additions, we'll have to go and increase the cost at the end of the year. When it comes to the disposals, does it affect the cost or the accumulated depreciation, or both? Thank you, Sibusisu. Both, in other words, cost and the accumulated depreciation. Thank you all. You get the idea. So therefore, it's going to have an impact on the cost at the end of the year, as well as the accumulated depreciation at the end of the year. And then when it comes to depreciation, the depreciation expense, which one of those will that affect? Will it affect the cost or the accumulated depreciation, or both? The accumulated depreciation. Sibusisu, you are very quick, I must say. I don't know how you do it. But anyway, there we go. It's only going to affect our accumulated depreciation. Okay, ladies and gents, so let's start with our equipment. Let's go and have a look. Maybe we can do it. We'll have to look at the, let me just go to my Word document again. For that one, we don't have the general ledger accounts. You can draw them up, obviously. It's very easy to draw up. You simply use your opening balances and you post the journal entries. But let us go and look at our journal entries. Do we have any journal entry that relates or affected our cost or accumulated depreciation accounts for equipment? Do you see any journal entry that affected our cost or accumulated depreciation on equipment? Yes or no? You say, if you look at the journal entries there in front of you, are there any journal entries that affected the cost or the accumulated depreciation of our equipment? Okay, I know what you're saying. There's no entry that affected the cost, accumulated depreciation. Yes, thank you. There we go. So maybe I didn't phrase my question so well initially. I'm sorry about that. So there was no entry that affected the cost, because we didn't dispose of equipment and we didn't acquire equipment either. It's only if you acquire equipment or dispose equipment or both that it will affect the cost. But we have that very first entry that affected the accumulated depreciation. So there we can see we debited depreciation by 192,000. we credited equipment accumulated depreciation by 192,000. So that means there was movement in the equipment accumulated depreciation account. So we'll have to go and disclose that in our note. Oops, I think the note is upwards. And there we see, ladies and gentlemen, we describe it exactly as we've said. This represents the depreciation for the year. Again, if it increases your carrying amount, you're going to show it as a positive. But if it decreases your carrying amount, you have to show it as a negative. So remember, we said already when it comes to the opening balances, which one would be the positive and which one will be the negative. But here, when it comes to the movements, we also got to decide that. So if that movement causes an increase in your carrying amount at the end of the year, you are going to show it as a positive. If that movement is going to cause a decrease in your carrying amount at the end of the year, you're going to show it as a negative. Right, ladies and gentlemen, so now we have seen in our ledger, or in our journal, I should say, in our general journal, that we debited depreciation by 192,000. We credited equipment accumulated depreciation by 192,000. Okay, so that was the only movement when it comes to equipment. That was the only movement. Okay, there's nothing new in the chat. It must be something else that beeped on my side. So we might as well now go and finish off that column because that was the only movement. If there are no movements in a particular line, ladies and gentlemen, we have to put in a little dash there. That is the way accountants publish their financial statements. For some reason, they don't put a zero. They definitely do not leave it blank because then it's just unfinished work. So they put in a little dash there. And there as well, because there were no additions and there were no disposals. Now we simply go and reconcile it to the end of the year. So what is at the end of the year, ladies and gentlemen? At the end of the year, what is the balance on the cost of equipment? If you can type for me, please. What is the balance on the cost, the equipment cost account? We haven't purchased any, we haven't sold any. So what is that balance at the end of the year? It is still, thank you, Kutle, thank you, Sibusita, thank you, Inati, Ziduki. Okay, Ziduli, thank you. Right, ladies and gentlemen, so there was no movement in the cost simply because we haven't purchased or acquired any equipment, and neither have we disposed of any equipment. So that makes that very easy, ladies and gents. So simply our cost is still 1,200,000, right? Nothing there affected the cost. Nothing in our movements during the year affected the cost. So that is still the same as at the beginning of the year. However, when it comes to the accumulated depreciation, we had a balance of 240,000 at the beginning of the year. We wrote off a further depreciation of 192,000 during the year. So what is the total balance on the accumulated depreciation account for equipment now? What is the balance now? 432,000. Thank you all. Exactly. Thank you, Liema. Thank you all. There we go. 432,000. So how do we get that? It is simply the 240,000 opening balance plus the 192,000. That gives us 430. But because accumulated depreciation is a negative asset, we show that in brackets. So now what does it give us? Let us see, ladies and gentlemen. If you take that 1.2 million less the 432,000, does it give you 468,000? Sorry, 768,000. Does it? Let's just check on that. Does it give us 768,000? It does. Thank you, Kukli, and everyone else for confirming that. So how can we check whether we haven't made any mistake, ladies and gentlemen? Is there a way in which we can double check this? Yes, there is. So how can we check that we haven't made any little calculation error or something here? The way to go and check it, we can also now say our carrying amount at the beginning of the year, and there was only one movement, our carrying amount was 960,000. There was one movement which decreased the carrying amount by 192,000. That must also give us 768,000. Does it? Yes or no? If it doesn't, then we've got a problem. Then we'll have to go and find our mistake. Does it? It does. Thank you. So we haven't made a mistake. Thank heavens. We wiped the sweat from our brow. No problem there. So now we can go to the vehicles. Right. Thank you. So thank you everyone for confirming that. So now we can go to the vehicles. So in the case of the vehicles, we've already seen where those opening balances come from. Now we'll have to go and either look at our ledger accounts or our journals, or we can look at both, doesn't matter, to see which movements there were. So maybe let's go, because we've started this with the journals, let's maybe go to the journals again. So if we go to our journal entries, are there, oops, there we go. Are there anything, any entry, any journal entries there that affected the either the cost or the accumulated depreciation of our vehicles? Let's maybe just start with a yes or no. Are there? Yes, there are. Which journal entries? The second one affected the accumulated depreciation. The third one affected, we can see there, it affected the accumulated depreciation and the cost, right? That very first two legs of that third entry. So in the case of the second entry, the second leg affected accumulated depreciation on vehicles. In the third journal entry, the first leg affects the vehicle's accumulated depreciation. The second leg of the third entry affected the vehicle's cost account. The other two entries does not, or the other two legs does not affect it, right? So there we already can see that we've got a total of three things that have affected our cost and our accumulated depreciation. But there's also a fourth journal entry. The fourth journal entry, there we can see it also affected the vehicle's costs. So in total, we've got four legs of entries, four legs of journal entries that combine to affect movement during the course of the year. So now we've got to go and put them in. Hopefully you can see now the figures there. The addition was 1.26 million, 1,260,000 was the addition. The disposal, I'm going from the bottom up now, okay? I'm going from the bottom up. So in the last entry, we've got the addition or the acquisition at 1.26 million. In the entry just above that, we've got the disposal, where we can see that we must take out a cost of 1.1 million, and we must take out a cost of 640. In the fourth entry, we must obviously go and add a cost. And then in the second entry from the top now, third from the bottom, if you work upwards, there we can see there is more accumulated depreciation during the course of the year. So now we've got to go and disclose all of that. So let us go back to our note. I think that is going upwards. Now we are looking at that column, the column that deals with vehicles. We've already got our opening balances. We're happy with that. So now, ladies and gentlemen, it is simply a matter of taking the figures. Now, remember we said there were four legs of entries. The fourth journal entry, the first two legs of the third journal entry, and the first leg or the second leg of the second journal entry. They all affected. So there are four legs that affects us in total. So here we've basically done the last journal entry first. Normally you will show your additions first in your note, then your disposals, and then other movements. So here we've got additions at cost that comes straight from our journal entry, that fourth and last journal entry. This one is a combination of two legs of that third journal entry, ladies and gentlemen. Remember there, we credited the cost of the account was 1.1 million and we debited the accumulated depreciation with 640,000. So that means that the carrying amount of the item that we have disposed of is 460,000 negative. We are selling it, so it will decrease our carrying amount at the end of the year. We've actually, earlier on during this class, we also calculated the carrying amount, you remember, right? So now we've covered three of the legs, the addition, the disposal, which had two accounts that it affected, and then that what was it, the second journal entry where we calculated the depreciation for the year. We also disclosed that if it increases our carrying amount at the end of the year, we show it as a positive. If it decreases our carrying amount at the end of the year, we show it as a negative. The same with that one. It decreases our carrying amount at the end of the year. So we're going to show that as a negative. Okay, now we've got to complete the reconciliation, ladies and gents. We've got to complete the reconciliation. So now what we have to look at, let's start with the cost. Let's start with the cost. In fact, it might be easier for you to just go and have a look at the ledger accounts. We'll do that in a minute or two, but let's maybe do it this way first. So let us just look at the cost. At the beginning of the year, the cost was 1.1 million. What did we take out from the cost? There, we took that 1.1 million out of the cost, right? But also there, we added a further 1.26 million to the cost. So what is the balance on the cost account now? That 1.26 million. Let us go to the cost account and see whether that is what we have said. We can see the vehicles cost account. Clearly, ladies and gentlemen, we saw that already. It had an opening balance of 1.1 million. What did we do with that account? In other words, which movements were there on that account? We added a further 1.26 million. So that is the addition. We debited it with 1.26 million. Voila, that is what it represents, additions at cost. Let's see what else did we do with that ledger account. We also credited that ledger account there. We credited the ledger account with 1.1 million, and we said at that stage that means that balance is zero at that point in time, right? So we took out 1.1 million. That is part of that line item that we are disclosing there, right? So it's the 1.1 million that we are taking out. Let's go and have a look at our accumulated depreciation for vehicles, ladies and gents. We saw that we had an opening balance there, opening balance at the beginning of the year of 480. What happened? What changed? What movements were there on that account? We increased that. Remember, this is a credit balance, right? We increased that credit balance by further crediting it with 160,000. So that increases your depreciation and it increases your accumulated depreciation on vehicles. And that is exactly what we are disclosing there. That is what we are disclosing there is the depreciation for the year on vehicles of 160,000, right? But because it's depreciation, because it lowers your year-end carrying amount, we show it as a negative. Remember, this is a column. It doesn't have a debit or credit side. So we have to show positives and negatives. What else happened on that account, ladies and gents? What else happened on that account? We decreased it. Yeah, remember, it's a negative asset. It has a credit balance. So, but here we debited it by 640,000, which means, ladies and gentlemen, that we decreased the balance of the accumulated depreciation on vehicles. And that is what we are disclosing as part of this line item here. Right, there we go. That's the 640 that we've taken out. You can, if you want, show them separately. I think in the notes we actually showed them separately for illustration purposes, but in practice you normally only show the net amount. But if you want to disclose it, if it helps you, then do it like we did in the notes. Okay, but anyway, it's the net effect of those two that gives us the carrying amount of the asset that we have disposed of. Now it is simply a matter of adding everything up, ladies and gentlemen. We saw that the 1.1 million cost, let's just start with the cost. We had 1.1 million cost. We took out that 1.1 million when we disposed of the vehicle, but we also added that 1.26 million when we acquired the new delivery vehicle. So what is the balance on that account? We can go and peek it. We can peek at it. We can look at it. The balance is 1.26 million, so we don't even need to calculate it in our table. You can take it straight from your ledger account, but I always suggest that you do the table as well. So it's at 1.1 million. I mean, you calculate it on the table as well. That is what I mean. Minus the 1.1 million plus the 1.26 million must give you 1.26 million. Right. Now let's go and look at the accumulated depreciation on its own. The accumulated depreciation started with a balance of 480. So we're going to calculate it on the table, and then we're going to look at our ledger account to see whether that confirms it. So if we calculate it on the table, we see it started the year with 480,000. We took out 640, so you've got to minus it, right? So that's 480,000 minus 640, and then we added 160. Or if you want to do it the other way around, you can start with minus 480 plus 460 minus 160. That will give you exactly the same figure. How much does it give you, ladies and gentlemen? How much does it give you? Let me ask you the question that you answer it, and then we'll confirm it by looking at the ledger account. So 400 and what is it? 480 minus 460 plus 160. How much does that give you? I just left out the thousands, but you can use the thousands as well. 480,000 minus 640,000 plus 160,000. How much does it give you? There's nothing wrong with your calculators. It is a zero. So your calculators are still working. The answer is truly zero. Okay, so you are all correct. Thank you for those answers. Now we can simply go and have a look at our ledger account. Is that truly what it reflects? There we see, ladies and gentlemen, there we see vehicles accumulated depreciation. That was the opening balance. We reduced it by 640. We increased it by 160. There is no balance. No balance carried forward. So it has a zero balance. Remember, we have disposed of the old vehicle. We have not depreciated the new vehicle yet because we only bought it on the very last day of that financial year. So that new vehicle will only be depreciated in the next financial year. Okay, so we've got that. That is exactly what we are disclosing. It has a zero balance. So let us go and look at that table. There we go. Like we say, accountants indicate that with a dash. Now we can simply go and see, does it, alternatively, does it add up? Let's maybe start here. The cost, 1260,000 minus 0 gives us 1.2 million. So that works out. But let us now go and double check if you want. Let us go and double check. Let's start with the 620,000 carrying amount at the beginning of the year, and then we also go and see what effect did the movements have on it, right? So we started with a carrying amount of 620,000. There we added cost of 1.26 million. So if you can add that in your calculators, ladies and gentlemen. So we are doing this sum together now. We started with the 620 plus 1.2 million minus 460,000 minus that 460,000 minus another 160,000. What does that give us? If you can type for us, please. Exactly. Thank you so much. So you can see it all works out. That also gives us the carrying amount at the end of the year of 1,260,000, 1,260,000. So now we are quite comfortable that we haven't made any errors in our table because we have double checked it. We've calculated the 1.2 million by simply looking at the cost less the accumulated depreciation at the end of the year. And we verified that. We almost audited our own work. We verified that by taking the carrying amount at the beginning of the year and adding all positive changes during the year and deducting all negative changes during the year. And that must then give us the same amount as a carrying amount. Oops, we are running out of time, but we are done, ladies and gentlemen. We've only got 2 minutes. Let us just talk about I know that you've got another class at 1 o'clock, so I don't want to keep you away from that. So now it's just a matter of your totals column, ladies and gentlemen. We've already done that part. So now you just add up across, right? So you add up those two, it will give you that. You add up those two, it will give you that. You add up those two, the 192,000 and the 160,000, that must give you that. So you add them up across. You add this up. Let me see. Those two amounts must give you that. If you add up those two amounts, you get that. If you add up those two amounts, you get that. And then just to make doubly sure that you haven't made a mistake, you take that amount, which you've added up those two, minus that amount where you've added up those two. Sorry. Let me start again. I'm in a hurry now. I'm so sorry. You take that amount, the cost, right? Take that amount less that amount, the cost less the accumulated depreciation. That must also give you that amount. And when you add those two up, it must also give you that same amount. Sorry for that little hiccup there. So maybe just repeat that amount less that amount must also give you that amount. Students, I know that you've got to leave for your other class, but let's just maybe check, are there any questions from your side? Those of you who want to leave, you're welcome to leave. Those who've got questions, you're welcome to stay. Any questions from your side? No questions. Thank you so much. Thank you so much, ladies and gentlemen. What was the date of the new vehicle? If you have a look at, we can just go look at it quickly there. They said on the same date as the disposal. You're looking for the date of the acquisition. In this question here, they said the disposal was on the 31st of December 2014, But then the next one carries on. They say on the same date, in other words, still the 31st of December 2018, on the same day, Monty Traders bought a new delivery vehicle, right? So it's on the same day. So still the 31st of December. You're welcome, Sibusiso, anytime. Right, ladies and gentlemen, enjoy your next class. Remember, this is our final class for the year, but we are still available on emails. If you've got any queries, please approach your class group lecturer. We mentioned all the names at the start of the class. I don't think it was when we recorded, but we did mention them. So if there's anything not clear, we are there for you. We are still there. We are still, you can email us. It's just that our classes will now end today because next week is supposed to be a study week, right? So happy preparations. Enjoy your preparations. If there are queries, let us know. We will reply. We will sort out your queries. Thank you very much for attending, and thank you. I'm getting emotional now. I always do at the end of a year. Have a lovely assessment period, and we'll see you next year. I will still be there in financial accounting too as well. Okay, so I'll see you there. Thank you. Bye-bye.